Let's talk about racial discrimination in mortgage lending for a second. You're not going to believe this is going on. So it's a practice that involves denying financial services to residents of certain neighborhoods based on their race or ethnicity. Sounds crazy that it might still be going on today. The term came from the practice of mortgage lenders pulling out a map, spreading it across their desk. This is in the 50s, 60s, and probably before then, and taking a red pen and actually drawing red lines around a neighborhood and saying, okay, you're not allowed to issue mortgages here. You're not allowed to issue mortgages here in this neighborhood. And so they circled these neighborhoods, or they drew red lines around these neighborhoods on a map, and they told the people that worked at their bank, you're not allowed to give loans to anybody who lives in these areas. So it was intended to reduce risk, but it institutionalized racial bias and limited home ownership opportunities, specifically at the time for Black Americans. So in 1968, the Fair Housing Act, among other things, outlawed racially motivated redlining and tasked federal financial regulators, including the Financial Reserve, with policing and enforcing this. So you would think today, this was 1968, it became outlawed. Surely we're not still 60 years later seeing this. However, October 14th, credit union agrees to pay $6.5 million to settle redlining allegations. So this was a credit union. It was a Philadelphia area Citadel Federal Credit Union that settled with the Department of Justice. They were accused of redlining and refusing to issue mortgages in these predominantly Black neighborhoods. And this was from 2017 to 2021 that this was occurring, alleged to occur. Obviously, they settled. But I want to point out something here as a mortgage broker. The difference between a credit union, a bank, and a mortgage broker. When you go to get a mortgage from a credit union or a bank, you are applying for a mortgage from someone who is interested in protecting their own investment, their own self-interest, their own bank, their own money. And when someone is more concerned with protecting their own money than with serving a customer and helping them accomplish their goals, you get to see crazy things happen in an attempt to protect and hoard that money and insulate that money. And when you're dealing with a bank or a credit union, these are corporations or institutions that are looking out for themselves. How is a broker different? When you go and apply for a loan with a mortgage broker, that mortgage broker is not lending their own money. They're not lending their own money. They're not lending their depositors' money. They're lending a wholesale investor's money. And that wholesale investor is not looking at where the applicant lives or what race they are. That wholesale investor is looking at debt to income ratios. They're looking at credit scores. They're looking at income. They're looking at taxes and insurance, principal and interest payments. They're not concerned with protecting their own money or race. They are originating a loan, which is then going to be bundled with other loans and sold to Fannie Mae or Freddie Mac as a mortgage-backed security. And then they're going to get their money back, and they're going to do it again and do it again and do it again. So I want to encourage you, before you go apply for a mortgage, to talk to a mortgage broker and consider using a mortgage broker who's going to solely have your interest in mind rather than their own interest or the interest of protecting their depositors' funds or their own money. Mortgage brokers tend to be more competitive on rate, although not always, but they certainly are in a lot of cases. They're certainly more efficient and faster at closing loans. And I think they offer way more choices to consumers when you can fill out one mortgage application and get rates and loan options from a variety of different wholesale investors versus going to a credit union or a bank who's giving you one set of rates, one set of loans, and just one option. So wrapping up, very sad to see that this is still going on today by credit unions. I'm sure it's still going on today at banks. You can be certain with a mortgage broker, there's not going to be any redlining Every borrower who submits an application gets a fair shot, gets a fair look, and we're working specifically in the borrower's best interest, making sure that that borrower meets federal guidelines, getting that loan originated, closed fast, effectively, efficiently, getting it sold, and helping people just get into a new home. If you have any questions about mortgages, rates, what's going on in the market, it's been a little bit crazy. You have federal cuts, but Fed fund rates cuts, but you have mortgage rates kind of increasing, creeping back up a little bit. So if you're just curious about what's going on there, give me a shout. I'm Don Harkins with Don Harkins Mortgage Team. Thanks.